Debt.
The national debt.
The national debt.
It's big, massive, actually, but it's not new, right? The U.S. has been deep in debt for a while now. So why all of a sudden does it feel like everyone's getting a little panicky? Journalists, investors, politicians, economists. Well, for starters, there's this.
President Trump's one big beautiful bill passing in the House by the slimmest of margins.
The bill is passed.
$1 trillion of new debt over the last 8 weeks, the fastest pace ever on record outside of 2020. We're spending $3 billion a day just on interest, and now the Fed is quietly ending their quantitative tightening. Not because inflation is under control, but because of a liquidity crisis, one that threatens the entire.
This sleek modern train connects major cities in Kenya. Funded largely by China, the Kenya Standard Gauge Railway began operations in 2017. From gleaming railways to state-of-the-art highways, ports and power plants, Chinese investments have reshaped the African.
The hegemon is gone. We should not assume that we will necessarily have a smooth transition to whatever's going to come next. During these downturns, you get a migration of debt from the private sector to the public sector. The really unprecedented record levels of U.S. government debt to GDP, inflation, might be the only.
American workers will no longer be worried about losing your jobs to their jobs to America. Going to bring them back. Here is my 100-day action plan. We're going to rescind all the job-destroying Obama executive actions. Every member of my administration shares the same goal, to provide a level playing field for American workers and for America.
Soared last month, marking the worst October cuts in 22 years. According to the firm Challenger Gray & Christmas, there were more than 153,000 layoffs in October. That's a 183% increase from the month before. It's also the highest number of job cuts for October since 2003 and comes as employers have already announced more than 1 million job cuts this year.
Concerning, when do we have to be seriously worried about it? But first, here's what the debt even is. Congress spends more than it brings in through tax revenue. For 20 years, we've had a budget deficit. 2024's $1.8 trillion deficit was added to the combined deficits from the past years. This is the total running national debt. It's a lot. But obviously our economy now is bigger than back then, so here it is as a percentage of GDP.
The U.S. government's gross national debt has surpassed $38 trillion amid a federal shutdown, marking a historic high for the nation's finances. This comes just 2 months after the debt hit $37 trillion, reflecting the fastest single
debt crossing $38 trillion and deficits expected to stay above 7% of GDP for years. Economists now warn that U.S. could be nearing an uncharted fiscal territory. Our next report delves into what's driving this debt explosion in the U.S. and how it compares with Europe's fiscal discipline. And also why.
As we inch closer to a government shutdown this morning, you said you might do a lot of layoffs. If DOGE is already reducing the federal workforce, why is it necessary to link more federal jobs cut to a shutdown?
Well, the Democrats want to shut it down, and so when you shut it down, you have to do layoffs. So we'd be laying off a lot of people that are going to be very affected, and the Democrats, they're going to be Democrats. As you know, this country, no country can afford to pay for illegal immigration, health care for everybody that comes into the country. That's what they're insisting. And obviously I have an obligation to not accept that. That would affect everybody. You know, when I see what we're doing with AI and all the plants that are opening up in the country, $17 trillion is coming. And if you compare that to Biden, Biden had in 4 years, less than $1 trillion. We have 17 trillion, more than that. I think it's going to be much more than that, David. By the end of this year, I think it's going to be far over that. It's a record. It's already a record in 8 months. It's a record by a lot.
It began quietly, not with a summit or a war, but with a series of silent signatures.
In early spring, under the soft glare of Beijing's golden lanterns, a convoy of African ministers filed into the Great Hall of the People. Cameras were kept at a distance. The media was told it was a standard cooperation meeting, but behind closed doors, pens touched paper, and the global balance of power began to move. Within hours, 21 African nations had signed a strategic economic pact with China, a deal that rewired the arteries of world trade. Its clauses were simple, but its consequences were seismic. Africa would redirect 70% of its export contracts, minerals, oil, food, and data toward Chinese markets. In exchange, China would forgive billions in debt, invest in African infrastructure, and transition all trade settlements into the digital yuan. No one in Washington noticed not that day, but they would. By the time the documents reached Beijing's archives, America's financial countdown had begun. 2 weeks later, the first tremors appeared in the U.S. Treasury. Yields on 10-year government bonds began to climb, small at first, then violently. Wall Street analysts struggled to explain it. Foreign buyers were pulling out of U.S. debt markets, and nobody knew why. But in Beijing, they knew exactly why. Africa's reorientation had ripped out one of the last silent pillars holding up the dollar: African commodity backing. For decades, African exports had been priced and traded in U.S. currency. That constant cycle, Africa's gold, copper, and oil flowing into the world through the dollar, gave Washington the illusion of infinite demand. Now that pipeline was gone, the dollar had lost its hidden engine. In Washington, panic spread through marble corridors. A special meeting was called at the Federal Reserve. Economists gathered around a glowing red graph: America's total debt nearing $38 trillion, higher than any recorded in human history. Normally, foreign buyers, many of them African central banks, would absorb the shock by purchasing U.S. Treasury bonds. But now those buyers were gone, replaced by Beijing's quiet whisper: settle in yuan. Settle in gold, settle in your own currency, and Africa listened. For the first time, African nations stopped lending their export surpluses to America. Instead, they poured capital into a new initiative, the Sino-African Digital Reserve, headquartered in Nairobi. Inside the White House, the news landed like a thunderclap. "What? Do you mean they're not buying treasuries?" demanded a senior economic advisor. "They've diversified," replied an aide. "They've moved everything into yuan reserves and BRICS bonds." The room went silent, because that meant one thing: America would have to fund its own debt alone. Meanwhile, Africa was unrecognizable. Ports that once shipped raw materials now processed refined goods under African-owned factories. China had moved hundreds of manufacturing hubs from Guangdong and Shenzhen to Lagos, Dar es Salaam, and Addis Ababa. In return, Africa gained not loans but ownership. African presidents stood together in Nairobi to unveil the new Silk Corridor, a transcontinental trade route linking the Indian Ocean to the Atlantic, financed jointly by African development banks and China's new Global Infrastructure Fund. The corridor symbolized what the West never gave Africa: equality. "This is not colonization," said Ghana's trade minister. "This is compensation." Washington disagreed publicly and loudly. Cable networks blasted headlines: "China tightens grip on Africa. African nations sell their souls to Beijing. A new Cold War in the making." But African citizens weren't fooled. They remembered the decades of American lectures about democracy and debt, all while Western corporations drained their lands and priced their labor cheap. This time, the deal felt different. It wasn't charity, it was choice. The financial consequences struck fast. Within months, the U.S. dollar's global share of trade settlements fell from 63% to 51%. The yuan climbed past 25%, a milestone Beijing had waited decades for. But it wasn't just China that benefited. Africa's unified trade with Asia created a parallel global system, a world where the dollar wasn't the default, and that world terrified Washington. By summer, U.S. Treasury Secretary Evelyn Ross held a press conference, her voice tight with urgency. "We are monitoring the situation closely. America's economy remains strong, the fundamentals are intact," but the markets didn't believe her. The fundamentals were gone. Foreign investors were selling U.S. debt faster than Washington could print reassurances. The Federal Reserve scrambled to stabilize interest rates, but the numbers were impossible. Every percentage point increase cost hundreds of billions in interest payments, and with $38 trillion in debt, America was now drowning in its own paper. Back in Beijing, officials celebrated quietly. "They built their empire on debt," said a senior Chinese economist. "Now debt is what will undo them." And in Addis Ababa, the African Union released a statement that made Wall Street shudder. "Africa will continue to pursue trade denominated in yuan and local currencies. Our economic sovereignty is not negotiable. It was a line written in diplomatic calm, but its meaning was explosive. Africa had just publicly divorced the dollar. By autumn, Washington's panic turned into policy chaos. Congress rushed to propose bills, demanding sanctions on African nations participating in anti-dollar trade. But such laws meant nothing now. Africa didn't need American loans, aid, or approval. Even longtime U.S. allies began wavering. Saudi Arabia signed new oil deals with Kenya and South Africa, agreeing to accept partial payment in yuan. Brazil and Nigeria opened a joint agricultural exchange in Accra, and for the first time ever, the IMF's voting bloc split, with African and Asian members forming their own coalition inside the institution. The global order, once so tightly bound to Washington, was coming apart, and America, for all its power, had no tool left to stop it. In New York, a financial analyst summed it up live on television: the US dollar isn't collapsing because of inflation or war, it's collapsing because Africa stopped believing in it. He was right. For generations, America's strength had depended on others needing its currency. But Africa had shown the world that trade could thrive outside that orbit, that nations could prosper without asking permission. And as the red sun rose over Nairobi's skyline, illuminating the towers of new African stock exchanges and shipping terminals funded by Chinese partnerships, a journalist asked Dr. Mbeki what this shift meant for the world. She smiled. It means history has changed sides, and she was right. Because the empire that once wrote the rules was now learning what it meant to play by them. By the time Washington realized what was happening, it was already too late. The shift wasn't just economic anymore, it was psychological. The world had stopped believing that America was invincible, and once belief fades, markets follow. At first, the White House tried to control the narrative. Officials blamed temporary fluctuations, global uncertainty, and currency manipulation. But these words meant nothing to the millions watching their savings erode. Wall Street didn't need explanations, it needed confidence, and confidence had fled overseas. The US dollar, once the symbol of global dominance, was now bleeding faith. Every new Treasury auction attracted fewer buyers. Nations that once fought for US bonds were now quietly unloading them, and the biggest sellers were African. Central banks, in Addis Ababa, the African Union's Financial Council, gathered under dim blue lights. Ministers from across the continent stared at a single figure glowing on the screen, the real-time US debt counter ticking toward $38 trillion. Dr. Nia Mbeki, still calm and calculating, spoke to the room. For decades, our minerals backed their currency. Our oil fueled their fleets, our money filled their bonds. Today, we reclaim every cent of that lost leverage. The ministers nodded. Africa had not declared war, it had declared independence in the most sophisticated way possible, through economics. The continent's central banks were now coordinating with Beijing's digital yuan exchange network, allowing nations to trade directly without touching the dollar. Trade with China, once one-directional, had evolved into a partnership. In just one quarter, Africa's trade volume with Asia had doubled. Ships that once sailed to U.S. ports now docked in Shanghai, Guangzhou, and Tianjin. Washington called it a betrayal. Africa called it balance. Back in the U.S., the impact was devastating. The Treasury Secretary appeared on live television, her face composed but her eyes tight with fear. The fundamentals of our economy remain strong. She insisted, this is a temporary adjustment period, but the graphs behind her told another story. Interest rates were spiking. The government was paying trillions just to service its own debt. Foreign investors were gone. Domestic confidence was crumbling. In the suburbs of Ohio, retirees watched their pensions lose value. In Texas, manufacturing firms shuttered due to skyrocketing material costs. In Silicon Valley, venture capital dried up overnight because the tech world could no longer depend on African minerals or cheap Asian supply chains. And while Washington talked, Africa built. The Sino-African Economic Corridor, stretching from Cairo to Cape Town, had become a real-world artery of commerce. High-speed rail lines, digital payment systems, and cargo drones operated entirely under yuan-backed infrastructure. At its opening ceremony in Nairobi, President Isle of Ethiopia gave a speech that echoed across continents. We are not choosing China over America. We are choosing ourselves over dependence. Applause thundered. Cameras flashed. And somewhere in Washington, a senior advisor watched in silence, realizing the full meaning of that statement. Africa hadn't just shifted trade, it had shifted power perception. For centuries, America dictated the terms of global engagement. Now Africa was setting the terms and China was providing the platform inside the Pentagon. Analysts whispered the unthinkable. We're not losing Africa, we've already lost it. They were right. African nations that once hosted U.S. military bases were quietly negotiating security cooperation agreements with China and Russia. Satellite networks over Africa, once dependent on U.S. aerospace tech, now ran through African-built communication hubs, powered by Chinese 5 grams grids. The old leverage military, money, influence was gone. Washington still had weapons, but it no longer had access. Even Europe felt the tremor. Germany's energy sector faced collapse after African nations redirected natural gas contracts toward Asian markets. France's mining firms were expelled from West Africa amid mass protests demanding African ownership, not for an oversight. For the first time in modern history, the Global South wasn't asking for permission, it was demanding respect. Meanwhile, Beijing's confidence grew louder. Chinese state media aired segments titled "The End of Dollar Hegemony and Africa's Economic Renaissance." When asked about Washington's panic, China's finance minister simply smiled. For years, they told Africa to tighten its belts. Now it is America's turn. The statement went viral. On African social media, memes flourished. A cartoon of Uncle Sam begging at an African trade counter. A photo of the U.S. debt clock labeled "Made in America, owned by the world." A viral slogan, "Africa doesn't owe, Africa is owed." But the most telling moment came not from politics but from markets. When the Nairobi Commodities Exchange opened, global investors tuned in. Within hours, the exchange recorded over $200 billion in trade volume, mostly in digital yuan and the new AfriCoin, Africa's blockchain-based reserve currency. That single day proved the impossible. Africa could exist outside the dollar system and thrive. The world had options now, and that terrified Washington more than any missile or threat. By the third month of crisis, the U.S. Congress was fractured. Half wanted to pressure China through sanctions. The other half wanted to renegotiate with Africa. But Africa wasn't listening. African leaders were now touring Asia and the Middle East, not Washington. They were speaking at BRICS forums, not IMF meetings. They were signing technology and energy pacts, not aid agreements. "We have nothing left to borrow," said Kenya's president at the Johannesburg Economic Forum. "We have everything left to build." The audience, a mix of African and Asian delegates, rose in standing ovation. Across the ocean, American television hosts could only spin fear. China's puppet states, one headline sneered, "The fall of Western civilization," declared another. But behind those hysterical titles lay a quieter, more profound truth. The world had grown up, and America wasn't the parent anymore. By winter, the U.S. economy had entered what economists called a debt spiral era. Every attempt to borrow triggered higher interest. Every attempt to print money weakened the dollar. The system that had once enslaved others now turned inward, choking its creator. And Africa? Africa had become the stabilizer of global trade. African commodities priced in yuan, African exports denominated in AfriCoin. African labor commanding global wages. In just 2 years, the world's most exploited continent had become its most indispensable. As Dr. Nia Mbeki told reporters during a summit in Shanghai, the 21st century doesn't belong to East or West, it belongs to those who refuse to stay at the bottom. Her words echoed from Beijing too. Washington, a quiet, undeniable prophecy, because the debt that America feared most wasn't financial, it was moral. And Africa had just collected its payment. For the first time since the Second World War, nations no longer trusted America's paper promise. When Africa and China jointly announced the global reserve restructure, the world's financial architecture cracked. Overnight, global trade no longer needed the greenback to breathe. It was a new monetary dawn, the Nairobi Revelation. The announcement came from Nairobi, not Beijing or New York. Cameras from around the globe zoomed in as the African Union and China's Ministry of Finance unveiled the Afri-Yuan Reserve System, a digital currency block designed to replace the US dollar in energy, mineral, and agricultural trade. Dr. Nia Mbeki stood before the cameras, her voice steady but world-shaking. For decades, we were told stability required the dollar, yet stability never reached our borders. From today forward, our trade will be measured by value, not validation. Behind her, the logos of 54 African nations shimmered alongside China's red-gold emblem. The symbolism was unmistakable. Africa was not joining another empire. It was building an equal alliance. Washington in shock across the Atlantic, the U.S. Treasury held emergency meetings through the night. Charts covered every screen, bond yields soaring, the dollar index plummeting, foreign holdings evaporating. The president's economic advisor broke the silence. "We're facing a run on the dollar." No one replied. There were no playbooks for this. Within hours, markets reacted. Gold prices hit record highs, oil contracts shifted to yuan, digital currency exchanges froze under global traffic. CNN ran the headline in red, "The dollar's darkest day." The world moves on in Shanghai, traders toasted as the first Afro-Yuan transaction. Cleared between Ghana and China, a 600 million cocoa for infrastructure deal settled without a single U.S. bank. In Lagos, the stock exchange opened its new digital board, showing African commodities priced in Afro-Yuan, and in Johannesburg, the African Continental Bank processed the continent's first debt-free bond issue backed by gold, lithium, and cobalt reserves rather than U.S. treasuries. The effect was instant. African currencies surged. Investment flowed from Asia, the Middle East, and South America. The economic gravity of the world had tilted south. The debt monster awakens. Meanwhile, Washington's $38 trillion debt mountain began to crumble under its own weight. Foreign creditors, spooked by Africa's and Asia's defection, demanded higher yields. Every borrowed dollar now cost America more to keep. The Congressional Budget Office warned that, within a decade, interest payments alone would consume half of federal revenue. Yet investors no longer cared about projections, they cared about trust, and trust was gone. A single sentence from China's finance minister summed it up. Debt is power borrowed from others. America borrowed too long. Global reaction. Europe panicked. France and Italy begged the African Union for temporary trade agreements to secure cobalt and uranium supplies. Germany sent a delegation to Nairobi seeking joint access to African rare earths. But Africa's terms were clear: you buy processed, not raw, declared an AU. You build within our borders, or you buy from our partners. No loopholes, no shortcuts, no colonial nostalgia. Africa's export ban of raw materials to non-partner nations, introduced months earlier, had now evolved into a value mandate. It forced the West to industrialize in Africa or be locked out entirely. Factories began springing up in Zambia, Mozambique, and Senegal, funded by African capital and Chinese technology. For the first time, Africa was exporting finished goods to Europe, not ore. Western commentators called it economic blackmail. Africans called it justice, America's meltdown. Inside the White House, despair replaced denial. The Federal Reserve's emergency report was grim. Global demand for U.S. treasuries had fallen by 45%. The dollar's share of global reserves plunged below 50%. Inflation surged despite record-high interest rates. We can't print our way out of this, admitted the Fed chair. Every new dollar devalues the old. The U.S. had entered a debt spiral. To pay the interest, it borrowed more. To borrow more, it printed more. And the more it printed, the less the world wanted it. Meanwhile, the Afro-Yuan gained strength. African nations used it to fund green energy megaprojects and technology corridors. By year's end, 38% of global trade bypassed the dollar completely. A new kind of power, but the shift wasn't just financial, it was cultural. Across the African continent, a quiet pride settled in. Street markets in Nairobi displayed signs reading prices in Afro-Yuan accepted here. In Lagos, students wore shirts printed with "We finance our future." In Washington, the irony wasn't lost on historians. A nation once built on others' resources was now struggling to buy them. On a morning news show, an analyst sighed, "We lectured them about free markets. Now they're teaching us about freedom." Beijing's patience. Africa's plan in Beijing, Chinese economists watched carefully. Their plan wasn't to dominate Africa, it was to build interdependence. The Sino-African Credit Network issued mutual lending rights, allowing African banks to finance Chinese projects as equals. "This is not a master-servant economy," explained a Chinese trade delegate. "It's a mirror. We rise together." Africa's strategy was simple yet profound: trade sovereignty in exchange for shared development. Unlike Western loans that came with austerity clauses, China's partnerships came with factories, ports, and data infrastructure. Critics in the West screamed neo-colonialism, but African leaders smiled. They'd learned from history, and this time they owned the pen that wrote the contract. The collapse of confidence. By the third quarter, the once almighty US dollar was trembling. When Saudi Arabia confirmed it would price part of its oil exports in Afro-Yuan, the markets imploded. The petrodollar, America's last stronghold, was over. Washington begged Riyadh to reconsider, but the kingdom's reply was brutal. "We follow where the buyers are, and they are in Africa and Asia now." The stock market lost 15% in a week. American pensions evaporated. Supermarket prices soared. Protesters marched on Pennsylvania Avenue carrying signs that read, "38 trillion and nothing to show," the message from Africa at the BRICS Plus summit in Johannesburg, attended by 80 nations. Dr. Nia Mbeki took the stage once more. Her speech, later dubbed "The End of Permission," was broadcast live 2 billions. "We were told to be patient. We were told growth takes time. Yet we waited while our gold built your banks and our oil fueled your wars. We have waited enough. The world is turning, and this time Africa is steering. The crowd rose in thunderous applause. At that same moment, global markets sticked in real time. The Afro-yuan overtook the US dollar as the most used currency in international trade. The quiet in Washington. In the Oval Office, the president stared at a briefing folder stamped Top Secret Debt Crisis Mitigation. He didn't open it. There was nothing inside he didn't already know. The United States of America, one slender rule-maker and enforcer of global finance, had become a debtor pleading for time, and outside the window, the world went on without it. Ships now sailed under African-Asian flags. Ports that once waited for dollars now overflowed with Afro-yuan credit. And in every corner of the world, a quiet truth took hold. Power doesn't vanish, it moves, and this time it had moved south and east.